This video is for educational purposes only and not financial advice. Everyone is talking about AI. NVIDIA, chips, software. But what if I told you the real bottleneck isn't compute, it's power? And two companies quietly sitting behind this entire AI boom are Vertiv and Eaton. This is the power war behind AI data centers, and where the next big money could be. Before we compare these two, you need to understand one thing most investors are missing. AI is no longer just a software story. It's becoming an infrastructure story. Every AI model, every GPU cluster, every data center needs massive amounts of electricity. And we're hitting a wall. Power, not chips, is becoming the biggest constraint in scaling AI. That's where Vertiv and Eaton come in. Every ChatGPT query, every AI model, every training run, runs inside massive data centers. But here's the catch. These machines don't just need compute, they need insane amounts of power. So what exactly is this power problem, and why does it matter so much? Traditional data centers were never designed for AI workloads. Older racks consumed maybe 5 to 10 kilowatts. Today's AI racks? 50, 80, even 100 kilowatts or more. That's a massive jump, which means data centers aren't just compute facilities anymore, they're power engineering challenges. Just a few years ago, a data center rack used about 5 to 10 kilowatts. Now, AI racks are pushing 50, 80, even 100 kilowatts. That's not an upgrade. That's a completely different game. This is where the opportunity shifts. The biggest money in AI may not just be in chips or software, but in the infrastructure that makes AI possible. Power distribution, cooling systems, energy efficiency. These are becoming mission critical. And companies solving these problems are moving to the center of the AI trade. Vertiv focuses on data center power and thermal solutions, with strong exposure to hyperscale customers. It is a direct beneficiary of AI infrastructure expansion and is highly sensitive to data center trends. Eaton takes a very different approach. It offers diversified power management with exposure across industrial, utilities, and infrastructure sectors. It has an indirect AI exposure and is strongly positioned in global electrification. Over the last 3 years, the contrast is clear. Vertiv is growing fast, revenue jumping from around $7 billion to over $10 billion. Eaton is much larger, over $27 billion in revenue, but growing more steadily. Same story in profits and cash flow. Vertiv equals acceleration, Eaton equals stability. Vertiv is the high-growth AI play. Eaton is the diversified infrastructure giant. One gives you leverage to AI expansion. The other gives you resilience across multiple sectors. Vertiv benefits directly from AI data center expansion, rising power density, cooling integration. Eaton benefits from global electrification, industrial demand, power infrastructure upgrades. Same trend, different angles. Vertiv focuses on direct AI infrastructure, while Eaton plays broadly in the power ecosystem. Both follow the same trend but leverage it differently. And with opportunity comes risk. Vertiv carries higher expectations. It's priced as an AI growth stock, which means execution has to stay strong. Eaton, on the other hand, is more balanced. Lower risk, but also less explosive upside. Vertiv's backlog is around $15 billion. Orders grew over 250% year over year. That's a massive signal of AI-driven demand. Eaton also shows strong order growth, but across a broader set of industries. Price targets for Vertiv and Eaton reveal different market expectations, with Vertiv showing negative to low upside and Eaton slightly negative. So what does analysts think? Here's where things get interesting. Vertiv is already trading above analyst targets. Eaton is closer to fair value, which suggests that a lot of AI optimism may already be priced into Vertiv. A comparative performance analysis shows Vertiv's growth potential and AI exposure, while Eaton excels in diversification and stability. So now we have everything we need: growth, risk, demand, valuation. Now comes the real question. The final verdict contrasts Vertiv's high-risk, high-reward AI play with Eaton's stable compounding and AI tailwind, balancing growth and stability. Visit AIStocksHub.com for detailed reports on emerging AI companies, offering insights into the dynamic world of AI stock investments.